This created one of the most important financial cheat codes of the last 30 years. It's called the yen carry trade. Here's how it works. Investors, hedge funds, and big institutions borrow money in Japanese yen at ultra-low interest rates. Then they convert that yen into dollars, euros, or other higher-yielding currencies, and then they invest that money into assets overseas. And that could be anything from US stocks, emerging markets, bonds, crypto, real estate, you name it. Now, the difference between Japan's almost zero borrowing cost and the higher return almost anywhere else becomes free profit. Multiply that by billions or even trillions, and you start to see why this trade has been called the global money glitch. For example, in 2023, US interest rates were over 5%, while Japan's interest rates were still negative. And that created a huge incentive to borrow cheap yen, buy US assets, and make the spread. At its peak, Bloomberg estimated that carry trades involving the yen had reached hundreds of billions of dollars globally, but here's the catch. This only works as long as Japan's interest rates stay low and the yen stays weak. If the yen gets stronger, or if Japanese interest rates or yields go up, the trade starts to break. Borrowing becomes expensive, and then currency losses start to go up. And all those investors have to sell their US assets to cover the damage. And that's exactly what started to happen in 2024. The Bank of Japan raised interest rates for the first time in decades.